Hi everyone, welcome to today's video. So a lot of you ask me that, hey Akshat, you invest a lot of money in the stock markets, you invest a lot of money in the crypto space, you invest a lot of money in real estate and a bunch of different things. So have you robbed a bank? The answer is no. I have created a bunch of businesses that allow me to generate cash flows, which I then invest in different investments that I'm showing to you. So that is the simple thing. I have been at this game of building businesses for the last 14 years approximately now. So I started back in college. There is a bunch of learning that I have gained in this space that I would want to share with you on this video. Very important video for you to watch through stock markets or investments, because literally the first rule of investment according to me is that you must earn more. If you do not have good sources of income and if you do not earn well, you cannot make big money in the stock markets. Here is the reason why. For example, if you invest only 100 rupees in the stock market, if you don't have too much capital to invest, and if you get 100% return also in a COVID-like situation on your portfolio, your 100 rupee only becomes 200 rupees. If you make 10% on a 10 crore portfolio, your total portfolio becomes 11 crore. So this is a very important and fundamental thing for you to understand, because we keep on talking about stock market investments on this channel, and I get a lot of comments that, hey, I just don't earn enough to make a lot of money in the stock market. So the problem is not that you're not making money in the stock market. The problem is that you don't know how to proliferate your income streams. This is literally where the game starts. If you know how to proliferate your income streams, then you make investments and then you make those investments grow. So I hope you understood the context of why this video is so important. So please watch it till the very end. And also press the like button, that will make me super happy. Now, before I cover specific points that you need to incorporate in terms of building your digital businesses or any business that you're doing, let me tell you very briefly about me as a business person. And here is a very brief story about me. So when I started my first job, I was teaching underprivileged students at a non-profit organization. And every month I used to receive a salary of 10,000 rupees. Now, if I ask you that what was my monthly income, how much money did I used to make every month? You are making 10,000 rupees from your core job, which is non-profit. So therefore your monthly income is 10,000 rupees. I used to make 50 to 60,000 rupees every single month. I had scored a 770. So what I did was that along with my non-profit job, I also started my GMAT private tutoring business. And every month I used to make approximately 50,000 from that business itself. Now, the reason why I'm telling you that story is not to brag that, you know what, I have like these number of income streams or that number of income stream. The idea is for me to outline a habit. The habit being that every time you pick up any core work, right? For example, my core work was teaching underprivileged kids at a non-profit. That was my core job. Along with that, I picked up another income stream. I've been doing it for the last 14-15 years, and that is the result that you see. I had done a separate video, part 1 on this, where I spoke about my 17 income streams. So in case you have not checked that video, it's a slightly older video. You can go and check it out. Now, your question would be, okay, great Akshat, you have built 17 income sources. Now tell us, how can we go about building our own income streams? Okay. So I'll share 7 specific, 7 very important and 7 simple lessons with you. First lesson is that you must understand that businesses are powerful. Let me illustrate that point by giving you a very easy to understand but simplified example. So let's pick any example. So let's say that you are working with Zomato. Now Zomato has hired you. Now if you are bringing business worth 200 rupees to Zomato, then Zomato will pay you only 50 rupees out of it. So you are bringing value of 200 rupees to Zomato, you are getting 50 rupees out of it. So that is the usual split in jobs. But if you are working in a business or if you run even a small business of your own, then you get to keep all the money that you are making. Yes, the story is oversimplified. There are a lot of back and forths on it. But the important point to realize is that people get rich even by running really small businesses. That is the core message that you should derive from this first point. If you don't believe in the power of small businesses, you will never be motivated to start your own business. And that is where literally the story starts. So therefore, this first point is really important. Now, the second key point that you must remember is that business building is about risk mitigation. Now, let me illustrate this point by telling you my own story of leaving my management consulting job. So I graduated from INSEAD in 2015, and at that point in time, I had started my own side business of helping MBA applicants get into business schools. Now that business still continues, and I have become one of the top consultants in India over the years, and I've made a lot of money through that business. Now the reason why I'm telling you this story is that literally the day I graduated from INSEAD was the day I started thinking about this small business. So after a few years, I decided to have a conversation with my parents. I sat them down. I told them that, you know what, I'm going to leave my job because I want to do this particular business full time. Of course, their reaction was that, not super risky. You are making good money in management consulting. Why do you want to take risks in life? And of course, the usual conversations that any of us would have with our own parents. Now, the thing that allowed me to convince them to leave my job, or rather convince me also to actually dedicate myself to building this business full time, was that I had specific plan A, B, and C. Now, plan A, I had already started creating from 2015 itself. It was already taking off. I had already built a set of clients. So I was not just randomly going to my parents telling them that, you know what, that I will quit my job and do something completely wacky. No, not at all. It was very thought out. So I sat them down, I ran them through the numbers, how much money I'm making through my side business. I had that entire Excel sheet in place. I explained to my father about my plan B also if plan A does not work out. So essentially I had thought through my plan A, B, and C. Now, the mistake that I see a lot of students and especially youngsters make is that they will quit college to start business, which is cool, and I'm not trying to disregard your entrepreneurial abilities, but the bottom line is that majority of the times what happens is that if your startup does not work, your plan A does not work, then you end up wasting a lot of time just thinking about plan B, which is where the pain starts. It's not as if that your parents will not be supportive or your loved ones will not support you. They will all support you, but you yourself will get frustrated if you're sitting at home and you don't know what you're doing, right? So don't put yourself in that situation. Always have a risk mitigation plan. How to build a risk mitigation plan? Always think about plan A, B, and C. If your plan A fails, then literally the next morning you can start working on your plan B. Now, the third tip that I'll have for you is that be extremely frugal when you're starting with your businesses. Why is that? Because what happens is that I have seen several of my friends having great business ideas, getting a little bit of funding, and then burning that money away in hiring people and just trying to scale up their business too aggressively. And that is a recipe for disaster. Yes, you can get funding, you can get that initial high and all good things, but you're not building anything sustainable out of it. So it's very important to think small and think in terms of profit also. So all the businesses that I have built or all the business that I now invest in, all are profit, cash generating business. That's the game that I know. Now, why cash flow or cash is the king in startups? When you're trying to build your own business and you get a little bit of revenue streams, what does that do? It is not as if that it will make you fancy rich. No, nothing like that. But it gives you a long lead time or a long time to experiment and continue with your business. This is a very important thing to realize that, for example, if you're investing in the stock market and if you somehow manage to stay in the stock market for 10 years, you will automatically make money. Similarly, if you stay in a business and if you're able to keep your business afloat, then the chances are that you will again automatically make money from that business. So this is the bottom line. People realize and people always run after explosive growth, that hey, my startup is growing at like 100% CAGR and this is happening, and I'm hiring like 500 people and I'm building like 10 new offices. All that stuff sounds super cool, but always focus on profitability, because if you run profitable venture and profitable business, then that can allow you to live a very rich life. For example, in my case, I have not taken 1 rupee of VC money and I have no ambitions of making the next Byju's or building the next OYO and all that stuff. I'm not fascinated by that. You work, why? Because you want to live a fulfilling life. So as long as I'm building good growth, profit-oriented businesses, I can live a very healthy, productive life where I'm not super stressed. That is the goal with which I'm working, and I'm trying to communicate to you the point that even unfunded startups and people who do not want to take VC money, even they are running super profitable ventures and they are also moderately rich. So you can get rich too, even by thinking about small businesses. Now, this cost control thing is something that people do not usually have a good grasp on. So let me detail out this point by telling you one of my startup stories here. So I started Cases Over Coffee. It's linked in the comment. You can check it out. The model of that startup is fairly simple, that we hire mentors from ex-BCG, Bain, McKinsey consultants from outside India. So these are usually foreigners and they work with us. So as a result, we have to pay them a salary and remit that salary outside India. So it becomes like a major pain point for us. So initially when I started the business, we were paying these salaries by using PayPal. Our money used to get stuck. I lost a lot of money in terms of transactions. I paid higher commissions in terms of transferring this fees. Now our system built in such a manner that we were getting excessively dependent on PayPal and we were losing insane amount of money in terms of cost. Then I made a simple switch to exploring one of the startups that was run by my senior from INSEAD, and that startup is called as Wise. So I used that and I saved a lot of money in terms of remittances. I wrote a LinkedIn post also about it few days back, and literally that move itself helped me sustain that startup for a longer period of time. So the point that I'm trying to tell you is that while running your own businesses, you might have to explore your own cost cutting methods. We were remitting so much money outside India, we had to be really cognizant of it. So be very, very mindful where that money is going. I've also linked an article. You can go check it out about why it's a fascinating startup. You will get to learn a lot from my INSEAD senior on that. So I've linked an article on that. You can go check it out. But the bottom line is that no matter what you're doing at the start, please be very cognizant of the cost and look for every opportunity to save money. It allows you to stay longer in the game. Now comes the fourth point, which is around value add approach. Now value add approach simply means that, for example, if I am creating a business that is adding value of 100 rupees to you, then it is okay for me to charge 80 rupees in terms of delivering that value, right? Now this is a concept that is covered in a book called as Blue Ocean Strategy. It simply cost about value capture approach there. So this is a modified version. Simple way of understanding is the value that I'm providing to my clients is 100 rupees. And if I'm charging 80 rupees from it, then that's a good business. Now, using this principle, you must try to avoid commodity oriented business. For example, if you're trying to sell burgers, or if you're trying to sell chai, or if you're trying to sell coffee, then these will become really, really small and you might have a hard time in terms of accelerating your growth because you would not understand that how much value is that chai giving to your customers, and you will always compete on the price. So generally try to avoid businesses where you cannot figure out what value or what specific value you are adding and how much value you can extract out of it, because that becomes your profit. So be very, very cognizant of that. I know that I'm not giving you a straight answer which specific 3 businesses to start, something like that. That is a thought exercise that you need to do. But think about the value that you can add given your skill set vis-a-vis the value that you can capture out of it. Now comes the fifth point, which is that bootstrapped startups are worth gold. Now I can't tell you that how important it is for you to be free when you are starting your own startup. It is completely okay to take a little bit of angel investments. But the moment you start going to VC funds, you must be really cognizant of the fact that you will lose a lot of freedom in terms of how you want to run your own startup. So this is always a trade-off. I hope that you get to a point where a lot of VCs are approaching you. That might be a good time to raise money, but when you approach a VC, the negotiations that you might have, it might not be conducive for you. So always remember that grow to a certain scale, only then try to take VC money, because you will have more negotiating power at that stage. If you try to raise money very, very quickly, it might backfire for you in the long term in terms of not only losing a lot of equity in your startup, but also losing a lot of freedom in that process. Now comes the sixth point, that if you're trying to build multiple parallel income streams, for example, in my case, I'm currently trying to write a book, I run a YouTube channel, I manage different businesses, I invest in different businesses. If you ask me that, hey Akshat, what is the single biggest challenge for you now? It would be time management. I've realized that time is the most critical commodity for me at this stage. The more income streams that you create, the more your time gets sucked into all these different income streams. It becomes extremely challenging for you to manage your time. So therefore, learn about time management, learn about optimizing your time, learn about productivity hacks, incorporate productivity, plan your day, do every single thing that you can to extract the best value out of your time. I had made a separate video on time management. You can go and check it out. I will update that video and create a newer version of it subsequently if there is enough demand. I will do that. But bottom line, please understand that if you are trying to play this multiple parallel income sources game, time management is going to be your biggest challenge. So start learning about productivity and bunch of other related things. Now comes the final point, which is leverage your strengths. So important, so critical, so easy. For example, a lot of students reach out to me, they say that Akshat, give us some business idea, we'll love to run it. Even if I give you that business idea, it would be pretty much pointless, because if you're not passionate about it yourself, if you have not discovered that idea yourself, if you do not want to execute that business yourself, you will be bad at it. That's part A. Part B. People think a lot about building the next Facebook, building the next Google, all that stuff. But honestly, there are a handful of such companies and we don't need to do that to live a good life. We can literally handpick copy models and be super massively profitable at a small scale. That is also a wonderful way of living your life. It all comes down to your execution. How you are executing your businesses, that is more critical than your ideas. So for executing well, you must understand what your strengths, what your weaknesses are. For example, if you don't know anything about tech and you have started a tech business, then of course you need help. You probably need to hire a co-founder that is from a tech background. So please understand your strengths and weaknesses and accordingly structure your ventures. So in conclusion, building a small business is super rewarding. There are a bunch of challenges that you need to overcome, but it is a super productive way of living your life. Here is a very quick recap of 7 important points that I spoke about. Think about it, make notes, and if you have any questions, please drop your comments below. I would love to respond to them. and I will see you the next time.